Welcome to the Investors Podcast. I'm your host, Trey Lockerbie, and today I'm super excited to have with me on the show, Jason Calacanis. Welcome.
I'm super pumped to be here, so to speak.
Well, I've been loving all the stuff you've been putting out. The All In podcast, especially, I think is just fantastic. And
thank you.
We recently had your bestie, Chamath, on our show, and we were talking about his background a little bit and how he slowly realized his atypical background was an advantage or could be an advantage. And I know that when I was reading your book, you kind of described your humble upbringing in Brooklyn and feeling like an outsider because of it. And so I'm kind of curious, what was that like when you're first getting started? And did the outsider feeling was it still there even after you sold Weblogs to AOL?
So I have tried to cultivate my outsider status and maintain it. It's a little hard to do as you become more successful and your friends, who you've been friends with for a while, also become super successful. Then all of a sudden people think you're Illuminati. So in a way, it's like, I kind of look at it like the hip hop scene in New York. When I was growing up in the 90s, there was like this big hip hop scene. And I used to play basketball at the Chelsea Piers with a lot of the hip hop guys. And, they were just, group of guys doing business in the world, making art. And then all of a sudden they became Jay-Z and Diddy and, DJ Clue and all these other interesting cats. It's kind of like that happened in the tech industry. We're all a bunch of outsiders. We're all a bunch of rebels. The 90s and the internet was like a pretty rebellious thing, actually. It was fighting against the establishment of dial-up, Delphi, CompuServe, Sprint, AT&T, AOL. They were all trying to control this new online experience and mitigate it for $3, $4, $5 an hour, control the content, control your landing pages. And then this very disruptive thing called the internet came along and really changed everything about society and the world. And I was lucky enough to be born and in college when the precursor to the World Wide Web existed, which was ARPANET and BitNet. And so, I've always liked to feel like an outsider. And over time, you get old. I'm 51 now, which is really weird to say because I feel like I'm 31. Like my energy level, my enthusiasm, I feel the same as when I was 25 or 35 or anything in between. But I still try to feel like an outsider. When I sold the companies, I felt like, wow, this is a big deal. I'm a millionaire now. I don't have to worry about money. And that was kind of mind blowing as a kid from Brooklyn who grew up blue collar at best. And, even still today out here, I guess a lot of people consider me like an insiders because of my social circle and the investments I've made and the guests on the show. But I don't feel like I'm part of the Stanford computer science elite group. I still feel a little different. And I think, probably the same for Chamath. Sachs and Friedberg probably are more actually part of that, right? Having gone to elite schools and been part of that. So it's actually interesting. I never thought about it that way, but like you have two outsiders and then two insiders, basically, I think.
Yeah, it's interesting because from where I'm sitting, it kind of looks like this outsider, became sort of the ultimate insider, but that feeling of being an outsider is so interesting to me. And, when I was talking to Chamath about it, he was talking about how he's been able to turn it into an advantage. I'm curious if there's been situations where that mindset has proven useful, like any kind of scenario that you were like, okay, good thing I brought this certain perspective to the table.
It's probably a double-edged sword. Folks are often like, you really don't care what people think about you. And I'm like, I'm not a sociopath. Of course, I take people's opinions to heart, but I don't care if people don't like my opinion on certain topics. So I've been vocal about human rights, or I've been vocal about dictatorships, or just maybe principled in ways that people find weird or odd. I might be pragmatic on other issues, so I'm not virtue signaling here, but I've had many people say like, hey, maybe you should shut up about criticizing Facebook because they would be better for you to have all the Facebook people in your camp. They would become LPs in your fund. They would be allies in some way. And I think a lot of people in, our industry are a bit of sycophants or suck ups. And don't like to tell it like it is. They're not interested in being critical or intellectually honest about stuff. And, I think intellectual honesty and being candid is kind of something that I don't know how it got drilled into me, but I kind of like to be candid about how I feel about things and outspoken about things, not as a gimmick, but it's just kind of who I am. If I was at a dinner party and somebody said something I disagree with, I would not sit there quietly and not engage. And in fact, I might engage to the point at which it made other people uncomfortable, because I don't get uncomfortable with debates. And maybe that's part of the success of the All In Pod, is that you have four people who really are close friends and care deeply about each other, who can, have a really, intense debate at times, or a thorough debate might be a better way to say it, while still remaining friends and still listening to each other. And so I've really, as the moderator, the point guard, I'm sorry, I meant point guard. As the point guard, I try to really cultivate that with the other team members, of passing the ball, listening to the other people's answers, building on that. And, I just try to be a little bit deliberate. It's a different role for me. Usually I'm either interviewing people or being interviewed, not the moderator. I kind of always hated being a moderator of like panels, because on panels, I don't do panels at conferences as an example, because I'm like, if I'm on the panel, I talk too much, or I start a fight with somebody because I disagree with them and they say something I disagree with and I can't help it. Then it gets uncomfortable or entertaining, or both. And then if I'm the moderator, I have to cut people off because they start promoting, or they say something that's stupid, or that needs to be challenged, or they think they're going to be media trained and they're going to roll me with some media training. I ask them a question and they decide they're going to answer. They're going to tell me the origin story of their company. And I asked them, like, tell me about the unit economics, right? I'm trying to have an important conversation, a reasonable, thoughtful, deep conversation. And then somebody goes into media training, like, you're the host of a pod, I'm the host of two pods. Like, yeah, I'm trying to run a tight ship here. I want to have a good conversation. And if you start that media training, like, I'm going to stop you, like, especially at this point in my career. Like, I had somebody get on the pod recently. It was the founder of GoPuff, who's a just great founder. And I was like, hey, how does this work on the internet? I was like, well, let me back up for a second and tell you the origin story. And I was like, no, I just said, I didn't mean to be rude. I had listened to it. I was a little rude. I was like, no, I don't want to hear the origin story right now. I want you to tell me this pressing question that everybody has, and then we'll get to the origin story later. And I eventually let him do the origin story, but I was like, this kid's been media trained. I can't stand this media training. I was like, this is so fracking annoying to the audience. When the interviewer asks a question and the person goes off on their own agenda, and I'm not singling out the GoPuff. Every founder does this who's been media trained. And, I really care about good conversations, and good conversations change the world. I think that's why podcasting, listen, you're a notable podcaster. You got an audience. Like, the magic of podcasting and why everybody's here and not on network television is because we keep it real. We keep it 100, right? And that's what I just try to do. I try to keep it 100 all the time.
We just had a guest on the show who wrote a book actually about the PayPal mafia, and David Sachs obviously featured in that. And they described the culture there as highly functional, but like, the debates were heavy and heated and frequent, right? Yeah. And is that a culture you find pretty frequently in Silicon Valley? I mean, you came from Brooklyn, so you brought your own kind of flavor of it.
But I would say yes. I would say directionally correct. Yeah. I mean, I lived in New York, LA, and San Francisco. In New York, if you go to a dinner party and you say something, controversial, or you make a statement, you might very well have somebody say, can you back that up? Or that's not right. Like, people will get in people's grills about it. You say, listen, I think this is the greatest artist of all time, or I think this movie sucked. Somebody might be like, well, I think you're wrong. Then when I lived in LA, it was like, people were like, please do not make this uncomfortable. I was literally I was having lunch, we were skiing, and I was dating my wife at the time. And somebody was like, yeah, we're at this very nice ski vacation with like 6 or 7 couples. And it was all, we're guests. And this dude was like, well, 9/11 was a conspiracy by the Jews. And I said, what? I said, please explain that. And he's like, well, it's just obvious, like the Jews, and he couldn't back it up. I said, can I stop you right there? It's the most moronic ish I've ever heard. 16 of the 19 hijackers were Saudis. Like Osama bin Laden is a Saudi. Are you crazy? Like you can't say something that insulting, that insane without backing it up. And the other people at the table were like, calm down, dude. And the guy was like, well, I read it. I was like, where did you read it? And he's, well, I read it. I don't remember. I'm like, you don't remember where you read that the Jews flew planes? How did this happen? Like, we know they're Saudis. We have their pictures. We got their passports. We know everything about this. And you don't even have the dignity, like the wherewithal, the conscientiousness that if you're going to say something that's stupid, to have a source of information. Like you could have said, I read a conspiracy site that said this, or what do we think about this fringe theory that, and I would have been fine with it. Like, oh, it's a fringe theory. Yeah, we can all say that's stupid, but you're presenting it as a fact. So anyway, I do think the debate culture at PayPal was very real. Knowing Ruloff and Sachs are good friends of mine. I know Peter Thiel. I wouldn't say we're great friends. We haven't hung out socially all that much, but we know each other. We've had conversations. Yeah, and I've had Max Levchin on the pod. I've had Jerry Stoppelman. I've had, I can't even remember all the alumni, but I've had Reid Hoffman on the pod. So I know all of these folks, and they like to debate. And I think if you are building companies, you're trying to change the world, a fervent debate is necessary because it's kind of like you're going to the new world. It's like, do we go west or east? It's like, well, east is India, and you got to go around Cape Horn. That's pretty hard if you're leaving from Spain. And west, nobody's ever come back. So do we want to go the spice route and go around the Cape and we'll lose half the ships, or do we want to go west and certainty of death in all likelihood? Like, you have to have that debate. And how many lemons are we bringing before we get scurvy? And how many lemons do we eat every day? That's startup life. Like, you have a limited amount of resources, which means a limited amount of time. And 70, 80% of people die in this game. And by people, I mean companies. So if the mortality rate's high, it's kind of like being Shackleton or something, like pretty certain that we're going to die. We should really be thoughtful. So we maybe have a 10, 20, 30% chance of survival here. Forget about victory. That happens 10% of the time, but like maybe a 30% chance of survival would be nice. So you debate, and it's a good debate. And then you take action. So that's actually the secret, is knowing when to stop the debate. And it's not debate club. It's kind of like debating stuff during a zombie apocalypse. Like, okay, there's a bunch of zombies on the other side of this door, and there's another door over here, and we could go up the stairs. Like, we got to have a thoughtful decision about what's the best chance of survival. So I think that's why you see the people who run companies that are successful, whether it's Steve Jobs or Elon or Travis or, pick the person, they tend to be great at debating stuff and listening and taking in, dissenting opinions. Actually, the dissent is kind of the most important part.
I have so much respect and admiration for I've heard you talk about startups, and the way you talk about them is something I recognize as myself as a startup founder. And it's just, I know that you have this realistic perception of startup life because you've lived it. And I feel like you almost are there to kind of defend, in a way, what startups really are. There's a lot of mysticism, or people on the outside, they're like, well, why don't you just, pay everyone equally, let them work 3 days a week from somewhere else and give them health, all these things. And you're like, you don't understand. We are going to war here. We are, that's kind of almost the mentality, or the Shackleton, example you gave. I'm curious, is that something that came out from your Weblogs days? Like, when you're running your own company, is that something you experienced for yourself, or is it mostly come from, advising other startups along the way?
Yeah. I mean, starting as a journalist, then doing Weblogs and Engadget and all those, we really had to.
I think I've been saying Weblogs.
It's okay. People have said it before. It was before blogging was a term. We called them weblogs, and then people dropped the we. So it just sort of dates the company. Like, it's that old that the logs used to be on the web. It's kind of assumed. Anyway, I think there is a delusion that it's going to be easy. If it was easy, everybody would do it. And in peak markets, everybody does do it. As it gets easier, you see participation increases. So over the last couple of years, we've been in a 13-year bull market since 2008 to 2020. We had this like incredible 13-year run where a lot of young people have only experienced it going up and to the right. Now we've got a whole generation of people who are, say, 30-something years old who've only known an up market. Now, I've been through 3 corrections, basically. 87, there was a little one in 94, 95, then there was the dot-com bust, and then 2008. So maybe 3.5 I've been through, and one of them was when I was just going to college. So I experienced them as an adult, but I was in 2.5 of them, like in the muck of those compression moments, and they're pretty brutal. And you do see when it's hard, less people try, and when it's easy, more people try. And so I do think that there is this there's a certain number of people who are cut out for it. And again, this probably is a little rough for people to hear. But if you don't want to work hard, if you don't want to lead people, if you don't want to fight, if you don't want to deal with competition, if you don't want to go to war, if you don't want to be on a sports team, the reason these metaphors, sports teams and war keep coming up is because they're accurate, and they're the most accurate to describe startups. Now, if you're describing a nonprofit, if you're describing a GoFundMe project, if you're describing a Patreon project or art or a small business, maybe it isn't exactly a war. So I could understand why people are like, it doesn't have to be crazy or hard. It doesn't have to be manic. A lot of the people who say that are people who on their first time out left on that ship and made it to the New World. I don't know if Christopher Columbus's, journey to America was his first time, but if it was theoretically, and he got there and it was a huge success, he'd be like, being an explorer is easy. And he wouldn't realize that the 50 ships that tried before him were at the bottom of the ocean, or they landed and, got in a fight and got murdered or eaten by animals or whatever. So it is a war. It is like a sports team. You have to cut people. You get a better point guard. The point guard who you've been playing basketball with for the last 5 years is now on the bench. These are hard things to deal with as the founder and the captain and the pilot. And that is what's going on here. People who have been successful, like that Columbus example, or somebody who hit it on their first try, they might conflate that it's easy. And then this mythology around it's easy happens. Sometimes you hit a chord so perfectly, it's so transcendent that you find a money printing machine. It would be as if somebody, started digging for oil and hit the gusher of all gushers. It's unlikely, it's improbable, but it does happen. That person hits oil. They think, well, if I dig a hole, I hit oil. They've conflated their luck with skill. And then they have, a cognitive biases that this is easy. But anybody who's done it 2 or 3 times, or has been a capital allocator, or has been a journalist covering this, or has been a board member, or has worked at multiple startups knows it's a dogfight. And these companies almost universally have multiple pivots and or near-death experiences in their first 5 or 10 years. And then even the ones that hit scale and feel like they can never be knocked down, sometimes take a turn too fast, flip the car, and the whole thing just is over. They just make a tactical mistake. And, the company could be, hobbled forever, or maybe take a 10-year break. Microsoft missed mobile, and it was a 10-year diversion, right? I mean, they've recovered, but that was a spin out, right? They flipped the car on that one.
I want to talk about founders now that you brought it up, because you have this superpower of picking really great founders, and through your angel investing career that we're going to talk a lot about. But what you said just now kind of stood out to me. You were like, can they lead people? And something that I've kind of experienced for myself and seen in others is when you're founding a company, I don't think leadership is really at the top of your mind, right? The idea, the company, the product, the marketing, the distribution, these are all the things at the top of your mind. And then at some point you kind of flip and you have to become a great leader. You have to learn a lot of skills that I don't think are quite natural to most. Is that, are you looking for leaders early on, or have you seen that evolve over time? And if so, what are the characteristics of that when you're looking and shopping for founders?
Yeah. So, sometimes there's another very interesting causation versus correlation biases, right? And so when you're become a capital allocator, it really is great to be thoughtful and think through how you had the wins. Like, what did you see? And then maybe the anti-portfolio, and maybe be able to do some forecasting or some critical thinking. So a lot of people who start are not leaders. They're just great players, right? And so they can run really fast and put the ball in the basket. They're LeBron James, they're Michael Jordan, they're, early in their careers, they're just savants, right? They have a transcendent ability to do something, write code, market a product, package it, sell it, et cetera. And then what people realize is, if you want to go fast, go alone. If you want to go far, go together, is this, concept. And you can, score 40 points, as LeBron James and still lose the game. And Michael Jordan had a losing career. LeBron had a losing career. And then eventually you pair them with somebody, they make the team around them better. And then all of a sudden it's Steph Curry with Clay and Draymond, or maybe Draymond is the one that made Steph and Clay in a way because his leadership. And then you see he's not in the puzzle. They lose. He's in the game. They win. There are certain people who are glue and who can really, are leaders, and they inspire people to come on that journey. And that really is when you see if the person can be successful. What got you here will not get you there is a conversation I have with almost every founder who's successful. And I say, listen, your product brilliance, your contrarian thinking, your inability to quit is what got you to this point. But your expectation of others and the absolute savageness you have on yourself, the standard you hold yourself to, is so extreme and brutal for whatever reason. Typically your child in a relationship with your dad, put that aside. This preternatural, insane drive you have and this criticism you have of yourself cannot be unleashed on the people around you, or else you will destroy them and they will not show up for work. So you got to make those people, you have to change how you treat them. You got to listen to them. You got to inspire them. You got to make them feel 12 feet tall. You got to ask them really good questions. You got to demand excellence from them. You got to empower them. That's a different skill set. It turns out, like, Michael Jordan demanded so much of himself. And did you ever watch that Last Dance?
Oh yeah. Loved it.
Like, he's a miserable person to this day. He was miserable when doing all that winning, had brief moments of, I'm sure, incredible pride or whatever, but he's a dark person. I think anybody coming away from that is like, I feel sorry for Michael Jordan that he cannot enjoy being the greatest player of all time. And somebody needed to sit with him and say, listen, there's a 2.0 of Michael Jordan here. Make the people around you better. And I think arguably he did do that. I don't know if he did it enough to be happy. The fact that he can't maintain the relationship with Scottie Pippen and they don't talk and there's all this like fallout from it was probably unnecessary. There could have been a little mentorship there where he could have said, you know what? You won so much. It costs you nothing to make Scottie Pippen feel great. It costs you nothing to, give credit to other people. And he did make that pass to Steve Kerr, right? Like, so there were these incredible transcendent moments, I think, where he might have tapped into that, but he probably could have done it more and maybe even had a bigger legacy. Putting that aside, I do think, I can tell potential. I can tell who's that broken person who has something to prove, that chip on their shoulder. And this is going to also sound contrarian. But if you show me a balanced person, I will show you a moderate outcome in startup land. If you're a balanced person and you've got equanimity and namaste, you feel great joy in your life, are you going to work 78 hours a week to change the world, to kill your competitors and take everything personal and get this company over the finish line? I'm going to say no. I'm going to say in my experience, no. Now, maybe my experience is wrong, But all the great founders I see, from Steve Jobs to Travis and on, they got something to prove. And they got an energy level that, to me, is so easily discernible. And I've talked to other investors who are elite at this. Now, listen, I'm just starting my second decade. I have to do 3 decades if I want to be elite. I'm 1/3 of the way there. If this was a Michael Jordan or LeBron analogy, or Kobe or Steph, like, I got 1 or 2 championships, right? I'm a top 100 player of all time, certainly top 50 I'm top 50 in my field for all time. That legacy is certain, but I'm not top 5. Maybe I have angel investors, but not all in capital allocators. I got a long way to go if I want to crack the top 5. I'm pretty realistic about that. And I know what I got to do to get there, and I'll get there. Unless something unexpected happens or I have a terrible run. But if I just show up for work every day, I'll get there. And I would like to be the greatest capital allocator or top 5 of all time. I think it's possible. I'm a relatively young 51. I got at least 20 years of work I want to do in that regard.
Buffett's 92, so you might have more.
What's that?
The Buffett's 92. You might have more.
Yeah, I mean, listen, I also think there is a time where you have to enjoy yourself too. So there is that. Like, and I've had to have this conversation with people. Hey, you won, schmuck. You won more than anybody, relative to your peers, and let alone society writ large. Like, you've won a lot. Like, you could stop now and it would be the most epic of epic careers. Is there something you want to do that would be meaningful for you that you haven't done? And I had that conversation with myself after Tony Hsieh died last year, or 2 years ago now. And he was a close friend, and it was pretty tragic. And when you have a friend kill themselves in slow motion, depression, drugs, all these terrible things, when they were one of the best people you ever knew, you kind of got to stop for a second and think about it. And what I thought was, my God, he lived his life with such a zeal, and he enjoyed his friends so much. I kind of love my friends, and I love my family. I love certain things we do together. I got to get some more of that. And I just carved out a little bit of extra time for myself, because I never really asked myself, hey, what do I like? And so this dynamic, this archetype, it is so obvious to me, to your original question, that when I meet one of those people, it's like 2 Jedis meeting each other. Like, of course, I know you're force sensitive. I know you're a Jedi. I sensed you from across the room. I sensed you when I was in the Uber on the way to the building. Like, I just meet the person and it's like, okay, yeah, who was your master? Who trained you? What style of lightsaber fighting do you do? It's just obvious. And it is a superpower in a way. And in another way, it's just inherent. You just see it in individuals who will never give up, who will fight to the death. Doesn't matter if they lose a limb. Doesn't matter if they lose 2 limbs. Like, this Jedi stuff is a limb losing business, like, period, full stop. And that's why I use the samurai and the Jedi metaphor, the gladiator metaphor. Now, I know this makes people uncomfortable, and maybe it's a little sexist on the margins, but there were female Jedi as well. Ashoka is one of the most powerful Jedis. I mean, spoiler alert, she was Anakin's Padawan and Darth Vader's Padawan, and she kind of messed up Darth Vader in their first battle against each other. We'll see if there's other ones in the canon. She's a badass, right? And I think these founders tend to be warriors, and that means they're complicated. And now, as I'm 51, when I meet them when they're 25, I can actually be an asset, like an Obi-Wan, right? I consider myself moving into the Obi-Wan, from the young Obi-Wan to older Obi-Wan. I really think it's an apt metaphor when you can be somebody who's fought in the Clone Wars. This metaphor is getting really dragged here, but I think you understand it. When you've seen a lot of battles, you've seen a lot of people die, you've seen a lot of people succeed, you can be very, very helpful. And that's all I try to do. That's my secret power post-investment, is I can just say to the founder, no bullshit, how's it going? What's keeping you up at night? I know you're grinding your teeth. I can see your jaw. I can see that you haven't slept. Tell me everything. I hate to say it, but this is a safe space. You can tell me how you feel, because I've been there. And I've been there with founders who are crying in the shower, calling me because they just puked and their family's outside waiting for them to go to brunch. And they're paralyzed because they got 2 weeks of runway left. They're going to have to tell 40 people who are working for them that it's over. They can't raise money, and their entire identity and life is this startup and this title and this mission, and it's over. They failed the mission. Like, this is heady. Like, it can be pretty gnarly. But the great ones are like, yeah, I lost a limb, but I'm still alive. I get a robotic limb, get back to work. I'll go on the next mission. I'll succeed on the next one. And so we have to have that. There's really intense conversations that occur. And I think people have deluded themselves. And also, it's a very weak generation. You know, there's like a weak, or like maybe, you know, a large portion of the next two generations are pretty soft. Not all, because I work with the ones who are not soft, but there's a lot of entitlement, a lot of softness, and a lot of entitlement of expectation that this is going to be easy and they can just raise their next round of funding. And I'm like, I've had people like tell me like they're shutting the startup down. They got 4 months of runway, and they're like, yeah, I'm just not enjoying it. It's not working. And yeah, we hit 500,000 in revenue, but you know, I can only raise another $1 million. So what's the point? And I'm like, what's the point? You're telling me you've got ammunition in the gun and you're not going to fight? Really? Because I know guys and gals who they empty the clip and then they take their rifle and they beat people and try to fight with the empty rifle with no ammunition in it. And you're telling me you got a case of ammunition behind you, a couple of grenades, and just because you're pinned down and not enjoying the fight anymore, you're going to just, you know, call a timeout? There's no timeout here. Fight to the death. Period.
That right there reminds me of this Charlie Munger quote where he said, all I want to know is where I'm going to die so that I don't go there. And after seeing so many startups fail, I'm curious where startups go to die. So you mentioned a startup founder calling you up. They've only got 2 weeks of runway left. Is that the point of no return that's too late? And do you see that more often than not where they just failed to communicate sooner? They just failed to do, you know, what are the signs and common denominators of a failed startup?
Yeah, so a lot of good questions there, a lot to unpack. You will see founders, especially the young ones, be ashamed of their failure, not getting product market fit. Fancy word for consumers don't love the product. That's product market fit. Like, this is not a good hamburger. I'm not coming back. And instead of making the burger better, they do everything but the burger. So they change the furniture in the restaurant. They change the name of the store. And then all they needed to do is just look at the burger and take a bite, and then make another burger and make it 10% better, and do that 10 times. You do it 7 times, the burger's better. You know, compounding. So pretty simple, I think, to solve that problem. Product market fit is just a matter of focus, right? And focusing on the product and iterating product velocity. Product velocity requires that you have product people on your team who are really good. So if you have an average team and they're not focused, they may never get to product market fit because, again, back to this being a war, back to this being a competition, there could be somebody with better product people who are more focused, or they could be not as good as you and more focused, right? That happens too. So you'll see somebody who's not creative at all, like Zuckerberg, and he has just tremendous success by just copying everybody else and being more focused and saying, make it faster, make it simpler, copy more people's features. I mean, the guy never came up with his own idea. Every feature on that site has been copied. There's literally not one innovation that Zuckerberg's ever made. He's made 0 innovations and built one of the largest companies and most impactful companies of the generation. So it's a perfect example of somebody with no creativity, a mimemic machine, a complete thief, and he's making hits, right? So, and had massive success. It's never too late. I've seen people run out of money and keep the company going. They ask everybody they tell everybody, can you take a salary deferral, sign this piece of paper, I'll give you your money back plus interest if we get there. If not, we took a shot and we understand if you quit, or I'm cutting everybody's salary in half, or I'm going to give everybody a, minimum wage for the next 2 months. And it's like a real crucible moment. But like I said, this generation has only known 13 years of up and to the right, and each round being easier to raise than the next. and a lot of runway to not be focused. So I don't want to be like crazy old grandpa, like get off my lawn. But what we're seeing right now in this shakeout is a lot of founders realizing, oh, the last 2 rounds I raised super easy. I didn't have to prove anything. And now people want proof. And I have been really good at convincing people through performance, art, not actual performance. So when you raise your first round of funding, you're selling the promise of the company, but shortly thereafter, the product gets in marketing. You're selling the promise, not the promise, but the performance. And so all these theatrical people who could make a great deck or network super well, they find themselves SOL. They don't have any luck anymore. They're done. And that's the moment we're living in now. And I got a lot of founders who maybe have been given a lot of runway, and now the plane's got to get off the tarmac, and you may not have enough fuel to get it, and enough energy to get it off the ground. So, that's actually what I'm dealing with at the moment, when the market gets shaky like this. But you asked before about, the successful ones, and it turns out the crises makes the founder. It turns out the crucible, to my friend Ruloff from Sequoia, a peer and a mentor at once. He always talks about the crucible moments for companies. These like crazy decision-making moments where the founder has to just, go for it, right? You got to take that leap of faith. And, if you look at Uber, if you look at, any of the companies that had really hard times, it's like those hard times, that's battle testing a founder, right? That's the Jedi coming back from, an impossible mission and losing a limb and then going on to the next company or the next mission. So, sometimes people have it backwards. They think, Robinhood having a couple of challenges the last couple of years, like they're like, oh, well, that says something. Yeah. Like this company's got problems. And it's like quite the opposite. These founders now have had to deal with really hard things, and it didn't kill them. And that's why that other colloquialism exists. Like if it doesn't kill you, it makes you stronger. Like sometimes these phrases ring true because they're so true. And that is one of them.
You earn your stripes, so to speak. Now,
for sure.
With that last point, how much do you weigh a second-time founder over a first-time founder, just for that exact reason?
A lot of schools of thought on this. One school of thought is, the young founders, the inexperienced ones, the Zuckerberg or the Bill Gates, quit college, go do this incredible thing, Larry and Sergey, Google, or Steve Jobs. Like there's just something about the audacity of a young person who doesn't have any experience in the world being able to conceive of things that other people can't conceive of, or to have an energy level and something to prove that is really high. The truth is, it turns out the serial founders have a much higher success rate and have much higher returns in aggregate. Nobody's ever done the study, I would love to see it, of, those young folks who do hit it having outsized success if they stick with that company for multiple decades. So there could be 2 trends going on here. On average, the serial founder does not make the unforced errors. The crafty veteran knows how to get to the free throw line, knows how to set a pick correctly, knows how to inbound the ball off of the defensive player's shoulder and take it back and dunk it, like you see in sometimes those highlight reels. They do something clever like that. Like that stuff is just could win the game, right? And the average game is won by just a handful of points, 2 or 3 points. And so, not getting a technical or hitting a free throw can make all the difference in the world. And then, there's the outlier success that occurs as well. So both things could be true.
When you brought up Uber a minute ago, I wanted to talk about that as well, because, Uber has been one of your biggest home runs to date. And you have this quote in your book that I absolutely love. I hadn't come across it before, but you basically described someone asking how someone became rich and then responding with, by selling too early.
Yeah.
And as I understand it, you're still holding your position in Uber.
Some of it. I cleared some of it and I kept some of it.
Well, that was kind of part of my question was, what is the thesis for holding that the stock is kind of below its IPO at this point. I was curious.
It's bounced around, yeah.
Yeah, you've bounced around. It sounds like you've taken some chips off the table, but I'm curious, are you just kind of letting house money ride at this point and seeing where it goes?
I actually believe in the future of the on-demand economy and these great companies. And I think the transition to a new CEO and COVID, these are two crucible moments. And I think they passed both of those crucible moments. And then getting to profitability, which was always like a very weird conversation, because having watched the company up close, they were losing $1. In the beginning, they were fabulously profitable because it was only Lincoln Town Cars. Then when they went downstream to ride sharing, obviously, instead of making 10 or $20 a ride, you start making $1 or $2, but you have many more rides and consumption went crazy to the point at which people maybe were replacing their cars because Uber was so cheap. Parking somewhere we've all had this experience, like, hey, parking's going to be $40 and the Uber's going to be 15 each way, or the Uber's going to be 25 each way or 30 each way. It's $60, but you don't have to put gas in the car. You don't have to insure the car. So we're going to go full Uber. So all this was like so obvious to me. It was just math. And then you look I remember at some point I'd done the math and I was like, oh, they lost $1 billion. They did 2 billion rides in the quarter. I'm making this number up because I don't have it on my fingertips, but I had done a calculation. They were losing something like 48 cents a ride or 54 cents a ride. And I did it for like 3 quarters. And I was looking at the number. I was like, this is inconsequential. They're obviously losing 50 cents a ride, but they could be making $1 a ride and consumption wouldn't change. And then if they did make it $1 extra, $1.50 extra a ride, and they did 2 billion rides, they have $2 billion more, and the $2 billion more would equal this amount. And if they lost 10% of that, if 10% of the rides wouldn't accept a $1.50 increase, they would have made 1.8 billion. So it's so obvious to me that they could turn that, and they hadn't because they were in a dogfight with Lyft or DoorDash or Postmates, which they bought. So, and Postmates losing a bunch of money per delivery right now. And I just looked at it and I was like, well, Postmates at any point could just turn the dial. They're obviously building market share. So that's when I looked at it and I was like, okay, this is so ingrained. It's so hard to get to 100 million, 200 million people using your product and paying for it, that they'll obviously figure this out. And then I don't know if you saw like the experiences tab now that they're testing where, okay, you're in a ride, you could order food to your house, you could take a ride to a restaurant. And while you're in the car to the restaurant or you're planning your day, you could buy tickets to a comedy show or make a reservation at a restaurant or do other experiences. So this concept of the super app, I think, was always Travis's plan, and logistics everywhere, trucking, et cetera, which Uber Freight is doing particularly well from what I understand, with Lior running it. So there was just all this massive opportunity. And I think the massive opportunity is there. I don't see a world in which it's not 10 times bigger in 10 years, or at least 5 times bigger. And I also think, Airbnb, Uber, and DoorDash are the ultimate takeout candidates for Walmart, Amazon, Google, Apple, Facebook. Somebody will look at that collection and say, if Facebook was allowed to buy something right now, if Facebook bought any of those companies to combine their 2 or 3 billion people with that, oh my Lord, now they're really integrated into people's lives. You're going to a restaurant, taking Instagram pictures, ordering an Uber, but getting DoorDash or whatever. So I do think they're takeout candidates as well. But I also believe in taking chips off the table as you go. So my best advice, and this really depends on your net worth and how much inside information you have about a company. I don't have inside information about Uber anymore, but I did when it was private, because it's legal when it's private, it's illegal when it's public. But, my insights on those companies, I think, helped me. Like, the same thing with Robinhood. I haven't sold any Robinhood shares, and, they had gone up to 30 or 40 and done down to 10. I don't see a world in which Robinhood doesn't have 5 or 10 times as many members, and those people are super sophisticated and they're young. So they could be getting their mortgages, their equity lines, 529 for college when they do have kids, 401ks. They're going to be doing everything financial inside of that app, 100%, right? Same with Square. I own some Square shares. I'm never going to sell those either because Jack's a genius. And, young people using Cash App and businesses using Square, I don't see them using it less. And I see more opportunities in the future.
My wife, who doesn't listen to this show, just came home the other day. She was like, hey, honey, I'm getting into investing. I just downloaded Robinhood and I bought some ARK. I was like, oh my God. Yeah. So it's happening left and right.
The good news is, Like, think about if she trades some options or puts or calls, buy some crypto, and she does it with 1% of your net worth or 5%, and she learns. And maybe she loses the first 5%, or loses half the first 5%, and goes to 2.5%. But then she learns a ton. And then all of a sudden she turns the 2.5 into 20, right? Like, that's the journey of capital allocation, is learning about diversity, learning about, concentration on your winners and riding your winners and holding them for a long time. So, people who held Google and Apple and Facebook, even with the recent pullback on Facebook, they feel pretty smart, right? And so ride your winners.
Uber, Airbnb, Robinhood, all seem obvious now, but I mean, I can imagine when they pitch you for the first time, you're like, okay, getting in someone else's car, staying at someone else's house, or even Robinhood, it's free trading. Like, in your book, one other line I loved was you said that the craziest, most outlandish ideas produce the biggest returns. I'm kind of curious, who has given you the craziest pitch that sticks out in your mind?
Well, I've had mentally ill people pitch me. I've had people, who are certifiable pitch me. Probably happens more often than I know. So there's been pretty crazy ideas out there. Really weird ones. But if you just pause for a second and say, but what if it works? I always like to take that. And then the other rule the cardinal rule I have is don't underestimate anyone, because everybody who starts in this business is awkward and has weird ideas and is unrefined. They're not polished, and, Steve Jobs may have looked like a savant and a genius when he was doing those pitches, for the iPhone and the MacBook Air and the iPad and everything. Then if you watch his earlier pitches and you watch his earlier interviews, you can see that raw energy, but certainly not the polish and the confidence. You did see confidence, but it was a different type, like a potential confidence, not a I did this already confidence, and I'm sure on this one. So yeah, it's if there's consensus on the idea, it probably should exist already. So like, I introduced Uber to probably 25 people and 3 invested. So 90% didn't get it enough to write a check in all likelihood. So if 90, I would say, that doesn't mean, again, back to confirmation bias, et cetera, all these biases that exist in the human brain. It doesn't mean if 90% of people think it's a bad idea, that it's a good idea. It means it could be an outlier idea that, if it does work, could have outlier results. So, sometimes crazy is crazy, and sometimes crazy is crazy like a fox.
I've heard this sentiment around angel investing and VC, for that matter, where they've called it a negative art, which means that, if you find one reason to pass, you should, because there's just so many opportunities, so many pitches coming at you. If you find one red flag, you're like, okay, I'm out. Is that how you view it? I mean, it sounds
that's stupid.
I was going to say, it
that's
sounds
really
like
dumb.
A lot more.
Whoever had that advice is really dumb. It's what I tell people. I have a class I teach, Angel University, and all the proceeds go to charity. And we've donated, I think, $150,000 to charity over the last 2 years. And I teach it myself with my friend Mike Savino. It's like a 3 or 4 hour course, just everything I've learned, angel investing. And $175,000 actually donated to charity. So I'm pretty proud of that. I specifically didn't want to teach a course and make money from it, because then people are like, well, if you're charging for the course, I charge for the course just so people show up and then give the money to charity, which I think is more fun. So they have skin in the game. But I like to train my people, and we have in the investment company, a dozen people helping me process all these investments, which is not easy when you have over 300. I say, make a list of all the things that could go wrong. And then on the other side of your journal, list the things, but what if it goes right? But what if it works? And if it works, then you can rip up the other side, because when you look at all the red flags, that's basically a roadmap of what you need to fix or avoid. So if I told you all the ways you could crash a car on your way to the, Warriors game tonight at Chase Center, you're like, yeah, you could drive into the car in front of you, and I could drive into the bay, and I could go 150 miles an hour, and I could get a boulder could land on top of me. It's like, yeah, there's a million ways you could die on the way to the Chase Center. That's not what you focus on. You focus on staying in your lane and driving the speed limit. And if you want to be extra cautious, be a defensive driver and keep an extra space around you. If you see somebody drifting from their lane, avoid them and look in your rearview mirror and look for people acting crazy behind you. In other words, like there's this saying in race car driving, like, don't look at the wall, look at the road. Because you look at the wall, you're going to drive into it. Stay on the road, look at the road, you'll be fine. Most people going to the Warriors game are not going to die tonight. Most of them are going to get there and have a great experience. Are there a million ways you could die? Yes. But I mean, that the consensus is the other problem for early stage startups. You know, like, again, if everybody agrees, well, then it should exist. And if you talk to other people about an idea, the human mind is very negative and very pessimistic by default. Because as best I can tell, the people who are pessimistic and scared live longer. So we are terrified little creatures. And if we hear a loud noise, we jump back. And if we see something with, fangs, and we run. You survive longer. But the risk takers are the one who win. So you got to balance all this stuff out.
90% of the coffee at grocery stores is stale. You heard that right. The coffee you know and think you love needs an upgrade. Instead of rebuying the same old, let Trade Coffee send you something freshly roasted that you're guaranteed to love. Trade Coffee sells the freshest roasted and ethically sourced coffee beans from America's best local roasters. They ship free to you as often as you like, whole or ground. Whether you like instant coffee or want the latest exclusive geisha, Trade's real coffee experts taste over 500 roasts and use technology to match you with your ideal coffee based on your taste preference and brewing. Take the coffee quiz to get started. Trade guarantees you'll love your first bag or they'll replace it for free. And help support small businesses. Trade has created over 100 local jobs across the U.S. through their roasters. The coffee is shipped in a backyard compostable bag. You can literally bury your coffee in the bag they ship it in. Their subscription is no hassle. Skip shipments, change your frequency, or cancel at any time. Right now, Trade is offering a total of $20 off your first 3 bags. That's more than 16 cups of coffee for free. One thing you just said stood out to me around the 300 or so companies that you now are invested in. And you're looking at, I think, 30 to 40 a year. I mean, it's the law of large numbers to a degree, right? Because you only need one of these to outperform to really make a buck. So what I'm kind of curious though, is how you think about, I guess what's sitting with me is like how you optimize your time, because that's a lot to manage. And then you're running podcasts and you're doing research, you're talking about topical news on a daily basis. I mean, at what point are you like, how are you optimizing your impact, by joining the boards and the cap tables and having a say? So as I said before, like if you want to go fast, go alone. I did that. And then if you want to go far, like go together. So I'm taking the route of mentoring a bunch of people around me. And then I have people around me who are smart enough to say, hey, this is what you're really good at. Do more of that. And this is stuff that you don't need to do. We have people in the organization who are better at that. And so I am ruthless about delegation, and I get more ruthless. As one example, I used to meet with every single company that applied to our accelerator. This is hundreds of companies per cohort. And then I would do the last 50, and then I would do follow-up meetings with them. It was arduous. And then I would pick. And then over time, I just made simple rubrics, just heuristics of, for that 100K check coming to our accelerator, I actually don't need to be involved in it. It's a very small check. The team I've trained can easily take the lessons I've learned and their own intuition to make those bets. And so I no longer pick those companies. I will watch a video of them pitching their company. Maybe I'll read our coverage of it, but I can be bionic in that way. So instead of me meeting with hundreds of companies, I can have my team do that. They can send me the ones that fit the criteria. They can tell me if they get that spidey sense, and I still take meetings, of course, but it does work a lot better if I radically delegate. Also, if we're going to debate the deal structure, if we're going to debate legal documents, do I need to do that? Probably not. I have some people on my team, and I say, here's the heuristics, here's the rule set. This is our standard deal.
We can vary at 10%, but let's stay in this zone and let me know. And if the founder really wants to debate it with me, the person says to them on my team, these are the things that I can approve. These are the things that we do as a firm. I've brought this request to Jason before, like, will you buy common shares? And he's never done it. And I probably brought it to him 10 times where a founder has asked, will we accept common shares? And the answer is no. We have LPs. We told them we take preferred shares. We can't. Or will we waive our pro rata? No, we have LPs and we pitch them on our fund that we need to take our pro rata in order to be a successful fund so that we can get more money, so that we can keep investing in startups. So they can just say to the founder, Jason's, in my experience, going to very quickly say no, because this has happened a dozen times in the last 2 years. And you can, of course, contact Jason. Here's his mobile phone number, call him. And the person's like, yeah, I don't want to bother Jason with that. So I think that radical delegation is really smart. And the two things that I can really be helpful on is hanging out with the founders that we've invested in, meeting new founders who are elite and who have that Jedi, when I sense the Jedi force power in them. And then doing my podcast, which helps me meet new startups and helps me promote the ones we've invested in or share them with my audience. And those two things are the highest leverage. So you got to look at the highest leverage behaviors and then get rid of everything else.
I'm glad you touched on a few of the terms that are kind of non-starters or require requisites for you. I'd like to kind of nerd out on that a little bit. In the book, you talked about pro rata rights and information rights, all are obvious, and even classes of shares, which I did have a question on, but I understand the preferred route. I'm curious what you think about things like liquidation preferences nowadays and anti-dilution rights and certain things like that. Are you ever requiring things like that in a side letter?
We don't do funky stuff like that because it's against our best interest in the long term. In the short term, I've seen East Coast VCs, small-minded VCs do weird shit like this. And what happens is the next set of serious investors see it and you might scare them away. And part of what we do in Silicon Valley, we do in private company investing, is we try to create a device where everybody's in it together. That device is the share price. And you're the founder, you own 40% of the company. I'm an investor and I did the seed and I own 7% of the company. A Series A person owns 15%, and then a Series B person owns 10%, whatever it is. Employees own 15%. You have this great aligning force. The shares were $1 in the seed round. They're $4 in the Series A. They're $12 in the Series B. We all see our share price going up. We all know the employees know their strike price, and we can all just feel good about that. Now, preferred shares exist for a very specific reason. For people who don't know, preferred shares they're still one-to-one with common in almost universally. And when a company IPOs or gets bought, all the share classes turn to common and everybody has an equal share. But until the exit happens, the preferred shares have some protective provisions. One of the protective provisions is so the founders just don't take the money and shut the company down. The assets of the company, if $5 million have been put in, if the company is only sold for $3 million, the investors get their money first. So they would become 60% whole and nobody else gets anything. In those cases, there might be something called a management carve out where you say, hey, a third of the money or 20% of the money will go to the people who go to the new company. But that would be like a disastrous sale. Nobody really wins. But in a winning sale, you might have a situation where the founder or the board or a combination of them want to raise at $1 billion. So somebody says, okay, I'll give you the $1 billion valuation. But if the company sells for 500 million, we would like to get 100 million. We'd like to get our 100 million back and at least get twice our money back. If we're going to put 100 million at risk, we'd like to get 200 million back. So now the company sells for 500 million. That person bought 10% for 100, but they get 200 million of the 500. So they got 2 times their money back. Participating preferred, some people might call it a liquidation preference. Essentially, the easy way for you to think about this is I'm guaranteed at least double my money. Now, the founder might say, that's fine with me. You paid a ridiculous price. You paid the $1 billion price. I wanted to hit unicorn status. And you do see that kind of funkiness happen. The other investors might sign off on that. Hey, we're going to put $100 million in the bank account. Company's burning 20 a year. I guess it's 5 years of runway. we got plenty of time to get to that $1 billion outcome. If we do sell for 500, sure, they got the 200. So they took 40% of the proceeds. It's 300 million left. The rest of the cap table then splits that pari passu, fancy word for based on their percentages. So there are some things like that. In a down market, a company might be struggling and they have a down round. So they've raised in this theoretical $1 billion valuation. Now they can only raise at 400 million. Okay. So now you got a real challenge because you got to get people to buy into that. And that means you got to sell more shares to raise less money. And it can start what's called the debt spiral in startups. And in a predatory environment, like we saw after 2008, or certainly after 2000, somebody might say, listen, this company's going out of business. I'll put 500K and give you a bridge loan. It's highly risky. The market's in turmoil. There's a war. There's a recession. Typically, this happens during a recession. I'll give you the 500K, but I want a guaranteed 4x liquidation preference. I want 4 times my money back. So the company's valued at, 5 million. I want 2 million back. And the founder might say, you know what? The chances of this working are like 10%. So the person should get 4 times their money. They should probably get 10 times their money. It's a very low chance of succeeding. So I'm going to, bite the bullet and take that liquidation preference. But the problem is some people will try to put these kind of weird ratchets and concepts on when it's a good market. And then the next person may just say, the cap table is too complicated. How do I unwind this? How do I unwind that? And so that's when you get the debt spiral. And that's what everybody's trying to avoid. You want to keep this dream alive that the price goes up and everybody's winning together. That doesn't mean that a company who takes a down round or has a funky round is going to fail, but it can cause pain down the road.
You're a big advocate for syndicates and, or one of the, I think, original syndicates that
it was actually the first syndicate on.
First syndicate.
Yeah.
And I'm curious, and the book is inspiring, and I know it's a couple years old now, but it's still, I went back and read it, and it's so inspiring to think about getting more into angel investing. I mean, it's not often, obviously there's the accreditation piece and some other things, but with the syndicate, I'm curious, do you get any say in terms like that? Are you just, leaning on the lead in the round to dictate things like that, and you're just a passive investor if you're going through a syndicate, or what is that?
Yeah. So what a syndicate is a group of people who invest in an LLC that invests in a company. And there's a syndicate lead, in my case, me. We were on AngelList for the first 30 deals. And then we started our own, thesyndicate.com. It's not particularly hard to start a syndicate. We actually invested in a company called Assure Fund Management with an A. They were the back end for AngelList for a long time. They're our back end. And they can set up for 15K a syndicate in legal documents. We closed 68 deals in 2021 for $51 million. And so that's a pretty good pace. We're the largest syndicate in the world. We have 9,500 members. We had a couple of hundred a month. I think when the book came out, I had 1,000 or something. And my goal was to get to 10,000. So we're about to hit that milestone. Every time I do an Angel University class, we add another 300 to 500 to the syndicate. So that's pretty cool. And so if you wanted to dabble in angel investing, you would have to go find deal flow. To go find deal flow means years of building a brand and doing 50 meetings to find one qualified company, at least 25. So a syndicate might say, I'm putting 50K into this company. Would you like to invest? Here's a deal memo. We happen to host a webinar with the founder. We take it pretty seriously, very seriously, I would say. We do diligence. We check the legal documents. And we give access to the founder. Not all syndicates do this, by the way. So there's no rules around what a syndicate does. Somebody could just put 50K into the company, do no diligence, and then share it with you. It's up to you to do the diligence. In our case, we do diligence. You can do it yourself. But most of the time, these rounds are oversubscribed. You can't get access to them as an accredited investor. And you would have to do, 10 days of work, 100 hours to find the one company. And then you would have to probably hit a minimum of 50K. I'd say that's pretty much the minimum. With ours, the minimum is 4K per deal. And we have people who want to put 1 or 2K. And if we have room, we do that. I think the average person puts in 7K per deal, and our average deal is around 750. And that's usually a function of not how much interest we have. It's a function of two things. One, we are early stage investors. There might not be that amount of money in the round. So we get an allocation of 750, and then we have $1.5 million or $2 million in interest come in. Then we have to pare back our investors and say, hey, you asked for 10K, we're going to give you 6, yada, yada. Anyway, for the founder, they get one item on their cap table. They don't have to have all these angel investors as individual items. The syndicate members can pick and choose which investments they want to do, and they can pick how much they put into each investment. So this is a massive, massive benefit to them. If they were in a fund, they would get a statement at the end of the year, like I do. I'm in 20 funds that are not mine, and I think around that number. And they will send you a statement. Here's what you invested in. And you find out 10 years later how that bucket did as an index. Here, you get to pick and choose. You get to start your angel investing career, and you can put those angel investments on your AngelList profile, your LinkedIn profile. You're an angel in this company. Now you put in 7K, whatever. But it's a way for you, instead of doing one 50K check, to do 12 4K checks. This is a game that requires a lot of bets because most don't work out. I always ask successful angel investors, how many investments do you need in order to hit an outlier? An outlier, let's define as, 25, 50, 100 to 1 return. So $1 equals $25, $50, or $100. Most angels will tell me 20, 30, 40, 50, something between 20 and 50. I think in my track record, I've hit a unicorn once every 50 or something like that. Maybe I have 6 or 7, or maybe I have 9 now. And I've done over 300 investments. And, you probably take the last 100 out because, it takes maybe 5 years to become one. So in the early part of my career, I was probably at some point hitting 1 every 25, which is a function of my deal flow, my brand. And it's not super uncommon. Elite investors have that kind of track record. 1 in 25 hit unicorn status or is an outlier. So that's what syndicates are. I like doing it because it's a lot of fun to have a large number of people rooting for a company. We see many examples of companies being able to email all their syndicate members, typically 100 to 200 people, putting in 7K each, and they can get great feedback from them, great introductions, help them find employees, yada, yada.
I'm glad you said that you do it because it's fun, because, it must be something like that, because someone like you who has had the success they've had, they could probably park their money in an index and be a billionaire in 10 or 15 years, just
sure.
letting it ride.
Hopefully.
So it's got to be something to it that's keeping you coming back to this specific pond, to fish in. And I'm just curious, is it somewhat of a sport? We've made a lot of sport analogies.
Sure. Of course it is.
Is it kind of like
it's competition.
The sport of it? Yeah.
Yeah.
Very cool.
Just like poker or basketball or anything. It's like a fun sport. And you like to win. And it's fun to win together. And, I get a kick out of it. And I also like the early stage. So I could have been a late stage investor and done 2 investments a year. I like to do early stage investing. And, it's not efficient in terms of time. It's quite inefficient, in fact, but it's the most exhilarating. So, I'm sure cross-country skiing burns more calories and is safer. I like to downhill ski.
Well, you've had a big hand in, and you've seen, these founders become billionaires themselves. A lot of your friends have become billionaires right before your eyes. Our show is called We Study Billionaires. So I kind of have to
way to rub it in.
Question. Well, hey, it's just a matter of time. But I'm curious about the traits that you notice about the billionaires around you. Is there a common trait that you found between all of them that you've kind of singled out at this point?
Well, there's really 2 ways to get there. One is to be an investor, capital allocator, and the other is to either found the company or be an early stage and be an early employee at the company. So you're either allocating capital, starting a company, or being in the top 50, 100 investors at an outlier company. On the capital allocator side, I think it's consistently placing bets over a long period of time and holding the shares for a long period of time. If you get $10 million in an exit and you sell your Facebook shares for $10 million, if you had held them, you would have had another 10x. And, there's even bigger examples of that, like Google or whatever. There was somebody who was a fund manager who was in the same round as me, who sold their Uber at $5 billion, I think, and that was obviously a mistake. They missed the next 12 to 20x, depending on when they sold. So those last couple of double ups can be very material. So that's something to keep in mind. That's why, on the All In Pod, we talk about riding your winners. And I also don't care about being a billionaire, to be totally honest. So I have made some choices that are inefficient, like being a podcaster for half my day, where I could double the number of investments, but I enjoy it. And candidly, once you get past 10 or 20 million bucks, it actually does not matter.
Oh yeah.
The only things I can think of that I would probably delight in would be owning the Knicks. And I guess owning a jet would be fun. I could buy a small one now. I haven't. I don't know. Like I have a lot of friends, but I use the example in my book about like eating a hamburger. Like I've had a hamburger with multiple billionaires. Pretty frequently I do that. Does the burger taste any differently to the four besties on, All In, of which I am the poorest, in quotes, poorest? No, it's the same burger. And the greatest burger in the world, I think the most expensive burger I ever ate was like this $50 Wagyu burger with foie gras on it in New York. And it was a little outrageous. It wasn't the best burger I had, but it was definitely top 5. There's probably $20, $30 burgers I enjoyed more. Actually, there are. So these things don't always correlate. I can tell you, like, I skied 34 days this year. And I'm going to go back skiing for 2 more weeks. So I might hit 40 or 50 days of skiing. And that to me could have been 10 more investments, which are billionized me quicker. It's not that meaningful to me. And so, I know that's probably shocking for some people to hear, including a 30-year-old Jason Calacanis, but, I got 3 daughters. I like to spend time with them, and like an incremental 10 more investments a year. I'd rather just get the 40 days of skiing in.
I agree. I mean, there's certainly much more to life than money. I think we use billionaire more as a shorthand for, outlier or something like that. Something that has really come across. And you have 3 others, like you mentioned, the All In podcast on your show, that these are all outliers. And I am just so impressed with the extensive knowledge and wide variety of topics you guys discuss, while also maintaining this respect and love for each other while disagreeing adamantly.
If only you saw the moments between the 2 shows.
Well,
there's been some blowout fights, actually. There's been some, I don't want to get into how the sausage is made, but we've had some intense moments.
I think that just adds to it. I mean, it's inspired me to find a similar friend group that can kind of level up the discussion in a way. I'm kind of curious, as we kind of part ways here, if you could end us with some principles that you've used to help cultivate such an inspiring group of friends and the network that you have.
Yeah. I have, for me, growing up where I did, loyalty, being a good friend, is critically important for survival. And, it's just who you are. Again, back to that Jedi or samurai metaphor. I deliberately try to be the best friend to my friends that they have. And, that can manifest itself in a lot of different ways, but, it could be as simple as calling somebody and just saying, how are you doing? Or want to get a burger, and putting yourself out there and just being a mensch and trying to be relentlessly supportive. Other times it could be active. You see me on CNBC defending Travis, during, the most intense moments of the Uber saga that are, now in a TV show. So I'll put myself out there. I defended Robinhood, in fact, on CNBC. And so, and my friends call that air cow, like, air cover, like if you're friends with J Cal and you got a tough moment in time, he might go out there and help defend you. So I try to be a great friend. And, it came from a good friend of mine, Fritz. We lived next door to each other in Brooklyn, and it was like a Friday or Saturday night. And he's like, what are you doing? And I was like, I'm a loser. I'm alone on Saturday night. He's like, are there friends? I'm like, yeah, I have a ton of friends. He's like, well, why don't you go hang out with your friends? I was like, well, nobody called me. He's like, call them. And I was like, I don't really. It's like when I'm 19 or 20 years old. It's like, I never really thought about that. Okay, yeah, good idea. I was like, well, you're my friend. What are you doing tonight? You want to go to the movies or get some dinner? He's like, yeah, let's go get some dinner and go to the movies. We went to dinner and get to the movies. We talked all night. We had a great time. And that was where it clicked for me. And so, I know a lot of people who are very successful, and you'd be surprised on a Friday night or Saturday night, the most successful person or the 10 most successful people who you think are super happy, they might not have anything to do. And as you get older, your friend circle might contract a little bit. Or if you get really famous or you get really rich, maybe it's harder to make friends, and you kind of have a smaller subset of like an inner circle. And so you can kind of I think really double down on building meaningful relationships. And if you look at life, I don't think anybody at the end, I'm sure I will not look at my life at the end and say, you know what, I went skiing with my friends too much, and I had too much fun with my friends, laughing, playing poker, or taking my daughter skiing and teaching them how to ski, and that was a waste of time. But I might look back and say, I invested in 1,200 companies. Maybe I should have invested in 1,000 and done another 100 days of skiing or play poker more. So there's a balance there. I don't think you need to I have no friends who have just lost it. They work too hard. And then I remember this guy, Kevin O'Connor from DoubleClick. And he worked really intensely on that company. And then somebody's like, I saw your friend Kevin O'Connor, he's like a surf bum up in Malibu, whatever. And I saw him, and he was a surf bum. He was just surfing every day. I got a couple of friends like that. And then I think he went on and went back into business. But, this entrepreneur stuff can break your brain, and it can break your spirit. It can just, I'm not saying that happened with Kevin O'Connor. I don't know what the circumstance was, but he might have just decided he got addicted to surfing like I am to skiing, and just wanted to crush it. I just want to shred, And so, you do, I think, have to find some balance and really think about what you enjoy, what you're good at. And then, you make a plan, and you can change the plan. But, I've made my plan. I got a bucket list. I got things I want to do. I love being a good friend. I love being a great dad. If I can buy the Knicks at some point, that'd be really special. If I don't, I could afford courtside seats and go to any game I want. That's successful enough.
Well, before I let you go, I definitely want to make sure you can hand off to our audience. Everyone knows you, but can you hand off to, your podcast, to your
sure.
syndicate, anything else you want to share?
Sure. I do a podcast called This Week in Startups every day with Molly Wood. You may know her name because of Marketplace, Marketplace Tech, and How We Survive. So she's now the co-host of This Week in Startups in its second decade, 6 days a week. So just search your podcast player for This Week in Startups. Of course, the All In podcast has sort of crossed over from tech, number one pod in tech, typically one or two. Shout out Lex Friedman, who's a great tech pod as well. And then I have something called the syndicate.com. If you're an accredited investor and want to read the deal memos, we do about 2 deals a week. And I'm Jason on Twitter, twitter.com/Jason, and Instagram.com/Jason. And I have another company I run that I'm CEO of called inside.com, which you can go check out, which is a bunch of industry vertical specific newsletters. That's how I keep up to date and, hopefully get really smart. I think, I have one other thing that I'm doing called Founder University. So if you're thinking about starting a company, but you don't know where to begin, I started a 12-week course called Founder.University. And we had 100 people graduate the first. We have 200 people in the current one. And we charge $700 for this 12-week course of how to find product market fit. If you complete the course, we give you the $700 back. So I didn't want to charge for it, but I wanted people to show up. And so we suffered over this. And I came up with this idea of it's free if you show up. And it turns out 90+% of people finish the course. So I and these other MOOCs and, these massively online courses, they have 6% of people. And I was like, well, if you charged $1,000 for it or $500 for it, I bet you it would go much higher. So, skin in the game, Founder.University. It's been pretty successful. Oh, and the All In's going to do the All In Summit, which you should join us for. We'll talk about it afterwards. May 15, 16, 17 in Miami. It's very expensive. It's $7,500 a ticket, and it's going to sell out soon. But we also have a scholarship program for people who are students or whatever, and they can pick whatever price they want. And if they're fans of the show, we're going to probably of the 700 tickets, it'll be 400 or 500 paid and 200 scholarships or something like that. We're trying to make it like for the super fans of the show. And it's going to be a lot of fun. Me, Chamath, Friedberg, and Sachs are going to do it. And yeah, that's it. I think that's everything I do.
Just that.
Just that. I keep busy. I like projects. I come up with ideas. I build them. Everybody's like, oh my God, you've got all these successful projects. I'm like, you have not been paying attention. Like, you do not see the other, for every founder university or syndicate, there's like 4 or 5 other crazy ideas I launched and shut down. I like to try things. That's the other thing I learned from all these founders I work with. Like, if you think it's possible that something will work, well, give it a fucking try, man.
I was gonna say, is this the Elon influence? That you just tunnels on a whim.
I don't talk too much about Elon because it always blows back to me, and somebody clips the clip, sends it to him or sends it to some mutual friend, and it's not like a problem between us, but people are really obsessive about him, so I have to be very careful. But what I will say about Elon is he's one of the great people I've met in my life as a friend. Incredibly hardworking and determined, and all this success that you see is the result of not just his ability, which is very high, but a work ethic. You talk about all the things I'm working on, a work ethic that is impressive even to me. I'm a hard worker, but his ability to stay focused on a task, electric cars, 15 years, SpaceX, 15, 20 years, like, these companies are in their second decade. And that is really the lesson of success, is how long can you suffer through a never ending series of challenges? And, most people, cannot do that for too long. And that's why entrepreneurs and successful people in society should be not villainized or demonized. They're very rare that somebody can keep that level of focus and determination to solve the world's biggest problems. And when they do hit it, we should be really happy and really thrilled with that we have those people in society, because they're rare. And I'm lucky enough to have a lot of those friends. And, the next time, like, you see 6 Teslas out of 10 cars in a parking lot, and the air is cleaner, and the ozone is not getting burned, like, you can thank Elon for that. Like, all these car companies would not be doing what they're doing if Tesla had not been so successful. And I can tell you, Tesla would not be as successful if he did not suffer and put that company on his back. And you want to talk about near-death experiences, he's outlined them. Like, this is I was like a witness to it, like, having been there from when he made the investment and had to take over as CEO, which he didn't want to do. I watched the whole thing happen. Like, a lot of hard work and sleepless nights and weekends. So, and you see that over and over again. You get out of the fact that you can go order whatever food you want and have in your house in 30, 40 minutes, or you can get a taxi from wherever and not have to drive drunk, or leave your car behind and figure out how to get a cab and wait for 2 hours. Like, that's Travis, right? Like, he suffered over that company. There's a lot of pain and suffering to create this delight and to solve the world's biggest problems. And we got a lot of problems we got to solve. But I am more optimistic now than I've ever been in my life, for peace, for prosperity, for energy independence, for food, for transportation, for education, for opportunity, for democracy. Everything is trending so well in society. And it's because of entrepreneurs and scientists are entrepreneurial. I kind of put them in the same bucket, including my friend David Friedberg, and capital allocators. When you hang out with those 3 groups of people, I'll throw artists in there as well for creating joy in the world. There are people who build shit in the world, and those people are rare, and they build stuff that we all benefit from, whether it's the artist that makes us laugh or creates a piece of music that fills you with emotion, or the scientist who creates that mRNA that gets society back on track and keeps people from dying from COVID, or the capital allocator who puts the money behind Tesla and saves it from going extinct, or the entrepreneurs who run these companies. And as a society, I have my concerns about democracy, if I'm being honest. That's the last one I mentioned, because I think people take it for granted a little too much. And maybe these authoritarians, we maybe haven't had a really strategic plan and how to deal with them, as we're seeing right now. We're taping this during the war. I don't know when you release it, but we're taping it during the invasion of the Ukraine by a madman. Literally. a murdering authoritarian madman.
Unbelievable.
Yeah, it's unbelievable. And, we need to have a strategy. And the strategy is going to be energy independence from science, capital allocation, and entrepreneurship. We must become energy independent. And in order to do that, we need technology, capital allocators, and entrepreneurs to build nuclear, sustainable energy, everything, batteries, new grids, new cars, solar, and most of all, nuclear, which is, we're making such amazing progress and we won't take the win. So anyway, it's top of mind for me, but democracy is something that we really need to focus on.
And I 100% agree. There was a tweet just today, I think, by Mark Andreessen. It was kind of like prophetic, and I don't know, it just really stood out to me. He basically said, "This is the moment. Let's build nuclear. Let's frack. Let's drill. Let's go." Basically,
I'm not so sure about the fracking.
Well, yeah, of course, but
and drilling like strategically. Like we have to drill a little bit right now. I'm okay with it, but that fracking, just we don't want to destroy the environment, and like we probably don't want another Gulf, it's kind of BP oil spill.
Yeah,
but yeah, now is the time for nuclear for sure. The other ones, I think we just, certainly we need to be energy independent. Certainly Europe does. But I think nuclear, solar, batteries are the clear path, and just so easy. This is the thing that's so frustrating to me is everybody's like, it's impossible. I'm like, is it though? Like every day I see entrepreneurs and capital allocators build the future and scientists and do the impossible. I think you have a lack of imagination and optimism if you think it's not possible to build 100 nuclear reactors and then have Putin realize, oh my Lord, there's nothing valuable coming out of my country. I am going to go from, the 85th GDP per capita down to the 150th. Like my people are suffering already. We need to invest in something other than war and misery and oil. So
another point that I just want to touch on that I think you really
turned into a two-parter, brother.
Sorry.
It's okay. I'm okay with it.
but this idea of instant gratification that is consuming everybody. There's this Buffett quote. I'm reminded. I've referenced him a lot, but he's got this quote that no one likes to get rich slowly, and I think that's consuming people. We're forgetting 100%. The power of compounding. Right, you're forgetting the power of compounding, and you mentioned suffering for decades to build a company, and that's what it really takes to build something great. And I feel like a lot of our, the newer generations are not.
I mean, again, Tesla comes to mind. I have the Roadster, the Model S, the Model X. Then I got a 3 and then a Y, and I got rid of the 3 because I ran out of garage space and driveway space. You have a Y or a 3? I have a
3, yeah.
Yeah. I mean, the Y and the 3 are just transcendently unbelievable.
Best thing I've ever bought.
And I drove the Roadster the other day because I had to just get a new charging cable because the 10-plus-year-old charging cable. But I was just reminiscing about the entire list, back to the part of our conversation, of everything wrong with the Tesla Roadster. No power steering, the suspension, it's tiny. If you got in a car accident, it wouldn't be pretty. The handling, I mean, the pickup is unbelievable, but it's raw. It's as raw of an experience in a car as you're gonna have. And then I drive my Y and it's driving me to Tahoe on autopilot and it's perfect. And then it snowed like a blizzard in December, and I put these Nokian beautiful Finnish snow tires on it, and this thing like grips like it's a Jeep Wrangler or something. It's like the perfect car ever made, and it costs nothing compared to the Roadster. Was 150 plus, and this thing's 50, 60 or whatever, or maybe tricked out 70. I don't know. It's a third of the price, and there's going to be an even cheaper version soon. Like, oh my Lord, like the progress that gets made. And so I always think in decades now when I look at startups. Another kind of, to your point about compounding interest, people don't get it. I actually teach people the rule of 72 in my accelerator. I'm like, okay, explain to me the rule of 72. People are like, I don't know what you're talking about. I'm like, divide your growth rate into the number 72, and that's how many periods it takes to double. And they're like, I don't understand. I'm like, if you're growing 10% a month in 7.2 months, you'll double. And they're like, no, if I'm growing 10% a month, I'll double in 10 months. I'm like, compounding. And then I say, well, what if you grew 10% a week? They're like, well, then I would double in 7.2 weeks. I'm like, do it or try, see what happens. And, like with battery technology, you're not going to do that. But with the number of rides in an Uber, you might in a market. You might actually double in 7.2 weeks. Actually, Uber did. So, and consumer products certainly have Twitter, Facebook, et cetera. So, compounding interest is really what it's about. In related news, it's very hard to make a product it's very hard to make one feature of your product twice as good, but it's very easy to make 10 of your features 10% better. And if you take your product, whether it's a Tesla or an Uber or the app or Calm, you make 10 things 10% better, it loads 10% faster, the logo is 10% better, the meditation is, sound quality is 10% better, everything gets 10% better, 10 things get 10% better. All of a sudden, like, people don't realize it, but the product's really nice. And back to that hamburger metaphor, like, yeah, like, how do you make the perfect burger? Like, well, can the bun be just a little bit better? And can the burger be cooked a little crispier? And can the cheese be better? And what about the plate? And, the box it comes in and the wrapper and how's the sauce? Like, you start all of a sudden, you start breaking it down. Oh, the order process and the person who took your order, the speed at which it was made. And if you ever, I don't know if you ever watched this movie, The Founder, with Michael Keaton, or read.
Yeah.
Incredible. And then I read the book. I was grinded out. The Ray Kroc book is incredible, which is what the movie is based on, The Founder. Super underappreciated movie, especially for entrepreneurs, probably top 3 or 4 entrepreneurial movie ever made. Based on the song by Mark Knopfler.
There's Mark Knopfler again.
Mark Knopfler again, Dire Straits. Yeah.
Is that your favorite? Yeah, is that your favorite?
It's my favorite. Yeah, I'm kind of obsessed. Every day I listen to a live Mark Knopfler.
Got to go listen to some Mark Knopfler today. That's what I'm going to do on my way home.
The album Alchemy by Dire Straits. If you just go on YouTube, you'll find it. And if you were to listen to the Sultans of Swing or Once Upon a Time in the West, or any of Love Over Gold, any of these songs from Alchemy, the live album, it's a perfect live album. And Dire Straits was the rare band that was better live on a technical basis than even the perfect albums that came out in the CD period that blew people's minds, like Love Over Gold, Making Movies, and Brothers in Arms. These albums were just extraordinary in their precision. Mark Knopfler and Dire Straits got started a little later in life, so they were in their 30s when they hit, and they were just technically transcendent in terms of their ability. And when you listen to these tracks, like, you could listen to them 100 times and still be getting something out of them. In fact, there's this crazy phenomenon on YouTube of young people doing reaction videos to Sultans of Swing on YouTube. And what they do is, they've never heard it before, and they listen to the Sultans of Swing, and then this one woman listened to the Sultans of Swing, and then she listened to the Alchemy live version, which has this extended solo at the end of like 6 minutes. And she loses her mind and starts crying. The first time she hears it, I don't know if it's a put on, but all these people who listen to it, it blows their mind, right? And so I always, even though we're talking about commerce here, I leave room in my mind, as in terms of entrepreneurship. I consider scientists and artists and capital allocators and entrepreneurs as all part of the same 100%, nexus 100%. Of creators. And they're so important for moving the species forward. Like the crazy ones, as Steve Jobs would say, but this nexus of virtuosos and capital allocators and entrepreneurs and the founders is just pretty amazing. Ray Kroc was a broken person and some weird stuff, but his drive in this movie is worth watching.
But that moment, the moment of the like motivational record he was listening to, where they're talking about like, hey, how many thousands of talented people, have failed, it's not just talent. It's like,
it's amazing you bring up that moment. It's really fascinating because every entrepreneur I know has a moment like that where they're sitting there going, I could be somebody. I could be one of those people who does it. And it really is a mind switch from that's 1 in a million, or that's 1 in 1,000, or most people fail, to, well, somebody's got to succeed. So when I'm working with founders, I'm like, I'm going to give you this money. It's probably going to fail statistically. But if you do 2 or 3 companies, you're going to succeed. The odds will be with you. If you do 3, 4, 5, certainly one of them is going to hit. So let's go on this journey together. And in fact, one of my great investments is Raul in Superhuman, which we put $500K into their first round, their seed round, when he just had a deck, like a 3 or 4 slide deck. And that came because I had invested in his previous company, Reportive, because I liked this little toolbar he had made, and I emailed info@Reportive and introduced myself to him and put a little bit of money into it. And when he sold it to LinkedIn and I tripled my money, I turned 25 or 50K into 100K or 150 or something silly. And I said, just promise me when you do your next company, when you do your tour at LinkedIn, I'll be your first phone call. And literally called me on a Sunday and said, "Hey, Jake Al." And I was like, "Where are you?" He's like, "I'm in San Francisco." I'm like, "Want to get bagels?" He's like, "Sure." I was like, "I can't wait to hear about your new company." He goes, "How do you know I have a new company?" I said, "Because you promised me you'd call me. And it's 2 years after you sold. So you must have a new company." He's like, "I do." I was like, "Okay." He's like, "When are we going to meet?" I'm like, "Where are you in the city?" I'm in I'm in Cow Hollow, right next to Pack Heights. I was like, "I can meet anytime in the next 3 hours." And he's at my house an hour and a half later. So let me take a shower. I'll be over there. I said, "Okay, great. I'll walk and get bagels." We sat on the deck. We ate bagels. I said, "Brilliant." I said, "It's a pretty funny story." I said, "What's the idea?" He said, "Oh, I'm going to take on Gmail." I said, "Okay, great. I love it. It's a big target." I said, "How are you going to beat Gmail?" He's like, "I'm going to be faster, and it's going to be $1 a day." I said, "Okay." We're going to take on Google with the largest server farms that they built from their own proprietary open source. Seems like a paradox, but they built their own servers, the largest data collection of servers in the world. You're going to beat them on speed, and they have unlimited engineers. He said, "Yeah." I said, "How do you do that?" He said, "Well, here's the thing. They're building for sustainability for 1 billion people. We're going to build for 1 million." I said, "Oh, okay, that makes total sense, right? You're building a Ferrari, not a Prius. Perfect." I said, "Tell me this thing about like $1 a day, $30 a month, $360 a year. Gmail's free. So you're going to get people to pay for something they get for free." He's like, "Yeah." He's like, "How much time do you spend on email a day?" I was like, 2 or 3 hours. He said, "Okay, if I can save you 10 minutes a day, what's that worth?" I was like, "Well, I can tell you, it's 3,650 minutes a year, which is 60 hours. So 60 hours, and each hour is worth $1,000 to me. I don't know. I pay for $60,000. So if you charge me 600, that'd be 1%. So you're charging me 50 basis points, like 1/200th of the value I'm going to get." He's like, "Exactly." I was like, "I'm in."
Wow.
You want to talk about like a contrarian idea? I'm going to take on a free product, Gmail. Like, I'm waiting for somebody to come and be like, "I'm taking on Chrome." It's like, taking on a browser that's free, built by Google. Let's go. Somebody please pitch me. There's got to be something you could do better than Chrome, right? There's always an opportunity, right? It just takes the founder to have that crazy energy. And if you talk to anybody who uses Superhuman, they're addicted. They'll never stop paying. They're going to pay over 10 years, $3,650.
I got to check that out.
For something that's free. If you use under an hour, if you use your email for under an hour a day, it doesn't make sense. Once you get past an hour a day, it makes infinite sense, because they've created quick keys and scripts and snippets and things that if you really want to be bionic, if you want to be a superhuman at email, make total sense.
I remember that moment for me. It's kind of funny, but I was after I finished reading The 4-Hour Workweek with Tim Ferriss. I was like, oh, anyone can start a company. Now I know the playbook. And I was like, I'm going to start my own company. And the joke is that I did everything opposite of what that book said, which is all about outsourcing and tech. And I'm like, oh, I'm going to make a handmade tea business where I manufacture everything.
It was myself. A great meme. The first time I met Tim, Chris Sacca brought him over. We were in Tahoe, and I was at my friend's house, and Chris was like, "Hey, let's get a drink." Whatever. I was like, "Oh, come over. We're like right by you." And he brought over Tim Ferriss, and I just admonished and mocked Tim Ferriss for an hour. I was like, "This fucking book, dude. I got founders who now think they can work 4 hours a week, dude. They need to work 80 hours a week. This cannot be done. This whole thing is just like." You were like a snake oil salesman. I just was riding. We're very good friends now, but I was breaking his chops like you would not believe. And it's. But I did learn. I've learned a lot about efficiency from him. Like I do think that he tapped into something, and it's kind of like this like great meme. Like you could do it in 4 hours a week. It really is like, how efficient can you be? How superhuman can you be? How ruthless can you be with your time? So there is something to that, actually.
Yeah, the principle I took away from it was like, you don't have to answer every phone call, and you don't have to, that kind of thing.
My favorite Tim Ferriss story is we were in Italy on vacation with a group, and I was there was a basketball court, and I was just doing a layup drill, shooting. He's like, "How does basketball work?" I was like, "You put the ball in the basket. You never play basketball?" He's like, "No." I was like, "All right. Well, you dribble the ball," and I just, I dribbled up and I just did a little layup, and I said, "Do it." And Tim Ferriss looks like he's got a blindfold on, and somebody just hit him in the back of the head with a bat, and he's like, he tries to dribble. He can barely dribble the ball twice. He puts the ball up in the air. It goes the exact opposite direction of the basket. And he's like, "Do it again for me." And I do it again. It's like, "Do it one more time." I do it again. And then he does it. And he's now 60% of doing a layup. And I was like, "What? Wait." And he's like, "Well, I just studied that, like your mechanics and your body." And he can just study something and immediately get to 60 or 70% proficient. It's like really weird. Like he could start at terrible. Like he looked like he was drunk and blindfolded. And then he looked like he, had played basketball for 10 years. Within half an hour, he was doing layups. And then we did free throws. Yeah, it's pretty impressive, actually. Tim Ferriss is a very special person. I liked him a lot.
Yeah. I wish I could get him on the show. He's got his own. Well, I mean, sometimes podcasters do. Come on, look at you.
It's a hard thing, right? I should do it more because podcaster on podcaster action is really good. Like podcasters really can get into a rhythm with a conversation. I think it's like a really great thing for podcasters to do. I used to do it a lot more. And then I hit 6 podcasts a week and I was like, I don't have the time for this, but it does get your juices flowing. And, what people also don't know about Tim is he's an introvert. So you just assume, I always did, that people are extroverts if they have a podcast. Turns out the podcasting medium is very, especially with this remote thing, it actually like introverts pretty good at it. And he's introverted. And I think his energy, like if you think out of the power of introverts or something like that, or the theories on introversion versus extroversion, you're an extrovert, I'm an extrovert. I'm like super extrovert. I come out of a conversation like this with 20 ideas. And I like the rest of the day is going to be like amazing. I'm going to get a ton of stuff done. Introverts are like, "Ooh, that was exhausting. I just said a lot of things. I had to think about a lot of things. That was a lot of energy. I'm going to take a nap. I'm going to read a book. I'm going to go quietly, have a cup of tea and regroup." And so once you know that, extroverts have to be careful. I've had to be very careful with my introvert friends of not just steamrolling them with my energy level because they're like, "Whoa, 2 hours of JCal, too much, 90 minutes. Okay." You're going to be careful.
Thank you so much for doing this. I really appreciate having you on the show. I've been loving the content you've been putting out lately, and thanks for being such a resource for everybody. And I hope we can do it again sometime.
Of course. I appreciate it.
Thanks for watching. Make sure to subscribe and hit that notification bell so you don't miss out on the next podcast episode and new investing resources.
What are your takeaways and thoughts on this discussion? Let us know in the comments section below.